Lohchab, Head of Institutional Research at HDFC Securities, is with us. Varun, good morning. Great to have you on the show. Let's start with cement because our colleague Nigel was just talking about some of the price increases that are now coming through the system. That now that monsoon seemed to have abated to an extent. What is your current stance on the sector? Do you like it? And if so, what sort of players, which part of the country, which stocks?
Yeah, good morning. So overall cement sector, we are mildly overweight. We are not, actually the total material sector, which is cement plus metals, we are neutral. We are marginal overweight in cement and slight underweight in metals. In terms of, stocks, we prefer Dalmia Bharat out there among the large caps. Ultratech has been our top pick for quite some time. Dalmia Bharat is one among the, the large companies. ACC also we like in the space because of very attractive valuations. So yeah, these are some of the preferred picks within cement.
Varun, morning. You're hopeful of rural demand picking up. You believe the worst is over, which is why you have a bullish bias for FMCG names like Dabur and Marico, based on this rural theme picking up and improving as the year progresses. Now, this monsoon has added another twist, the deficiency in monsoon. Would you still be confident about rural markets picking up? Or do you think there is some distress building in based on your ground checks?
Yeah, so, we had come out with a very detailed piece on rural India where we had analyzed how various states and within that which districts are really fueling, overall rural demand. And basis that we believe, the worst seems to be over for rural, while at the same time, we have called out that the recovery, a mild recovery is underway. It's a mild one, not a very sharp recovery, but at the margin, things are moving on the upside. And we believe despite, say, monsoons probably ending up on the lower side this year, it's not going to completely derail the rural recovery, thesis which we have. If you look at historically also, typically, you need 2 years of bad, monsoons to derail, rural demand. And this is the first year. Last year, monsoons were fine. If you look at some of the other indicators, they are not pointing towards, things worsening for rural. So we believe, despite lower sort of rainfall, we will be able to chug along, and there will be rural recovery over next 6 to 12 months, but don't expect, a very sharp rebound or a very strong recovery at this moment. Some of the factors are pointing to only gradual recovery. So we are not overly worried. And the FMCG stance which we are talking about is we have been underweight, consumer in general and especially staples and FMCG for quite some time. While we are still underweight, we believe a large part of pain is behind us, and if there is a mild, rural recovery, which is our key thesis over next 6 to 12 months, then some of these FMCG names can start coming back, and risk reward in some of those names is looking attractive in the context of the broader market where we have seen very sharp price moves in rest of the pocket. So it's more tactical, and risk reward seems fine, but net we are still underweight FMCG and consumption as a basket.
Okay, got that. Varun, thanks for joining us. What are you making of this entire sort of surge that we've seen in the mid and small caps, more in the small caps, because it's been such a rapid move on this index? Do you think that there is still lots more to go here and there are pockets within it that still look good, or do you think that it's perhaps run up too much and is now a little bit concerning?
See, frankly, we are still not overly worried on, on small cap as an index, or say when we look at some of our, small cap or the, mid cap stocks in our coverage universe, we are still able to find, attractive investment ideas. In fact, at the beginning of the year, we had called out, and even on your channel, we had talked about the fact that we prefer small and mid caps over the large cap or the Nifty. We expected Nifty to remain largely range bound for the year with a plus minus 10% kind of a move, which is what we are still sticking to, that from these levels, we don't see much upside on Nifty. But small cap was looking attractive, especially come Feb, March when there was a sharp correction. From there, while it has rallied a lot, if you look at on a 5-year basis, small cap index is still not looking too overstretched. Obviously, there are pockets within that which would be, slightly getting frothy now, but I think we are still not overly worried, and we believe this outperformance of small caps could continue. In fact, there is only one pocket. Some of the mega caps are also looking okay in terms of valuations. The mid cap sort of bucket, which is more in the 30,000 to 70-80,000 crore market cap, I think that pocket is looking slightly stretched on valuations and performance. And then again, small cap looks fine. So that's how we are seeing the market construct. But mid and small cap is more about individual stock and whether you're finding enough ideas. Fortunately, we are still finding enough ideas from our coverage universe.
Can you share some of those ideas?
So it's across whole host of sectors. So like in real estate, we prefer Shobha. In construction, we have NCC. We have from exchanges, we have increased our weight. So we have both BSE and MCX out there. We also like CDSL. We have Crompton Consumer, Aditya Birla, Fashion. So it's a stocks. We have got stocks across multiple sectors in our model portfolio, which are more in the, I would say, not really small, like very small caps. They are like small cap to the starting point of mid caps.
So one theme is that there is going to be a gradual recovery, right? And that's driving some of your recommendations. Can you just very quickly tell us 2-3 other themes?
So investment as a theme, we have been very bullish on for last 12-18 months. We have been consistently pointing out that one should prefer investment over, consumption theme. So that's one. Even pharma we have been positive on. So that's another theme we believe that still has legs to go. When I say investment theme, so things like your construction companies, utility companies. So we have a fair bit of overweight even in utilities, construction, real estate. So I think these are themes which we believe are still going to drive the overall economy and markets over next 1 to 2 years. So one should stay over invested in these, while again you need to do your individual stock picking, because a lot of the stocks have run up. So it's not a basket case now, but we are still able to find enough ideas out there.
All right, Varun, we leave it at that today, but thank you very much for joining us with your take on the market and where things could be headed from here on as well. With that, we're going to get into a short